Hi everyone, this is Stephen. Welcome back to this Wealthy Education Technical Analysis video. Today we are going to be talking about the head and shoulders pattern and the cup and handle pattern. So let's jump right into these two patterns. The head and shoulders pattern is a bearish reversal pattern. You'll see the head and shoulders pattern at the top of a bullish trend. The pattern is represented by a formation that looks like a head and shoulders on the chart. The story behind the pattern is that a stock is trending up. It is making another push to the upside. Bearish sellers then push the stock back from a high. This is followed by bullish buyers who are able to push the stock up again past this initial shoulder on the left-hand side. So you reach an even higher high, which represents the picture of the head in the pattern. Bearish investors are then able to either sell the stock or short the stock back down to what is called the neckline. Bullish investors make one more final push to the upside, but not quite reaching the head of the pattern, which results in a second shoulder in the pattern. This can also result in frustrated buyers who have bought at the top or the head of the pattern. Subsequently, the stock breaks the neckline, heading lower, and that's the point to either sell your long stock or to get short. Next, let's talk about the cup and handle pattern. A cup and handle pattern is a combination of a consolidation pattern, which looks like a cup. You'll have the stock starting on the left-hand side of the pattern, trending down in a shallow pattern, and then trending back up, again looking like a cup or the letter C lying on its side. You'll get a pullback on the right-hand side of the pattern, which looks like a handle. And then when the handle portion of the pattern starts to move up, that's the buy signal. The handle portion is similar to a pennant pattern or flag pattern that we've talked about previously. So let's take a look at a few charts of these patterns. Let's start by taking a look at the head and shoulders pattern in the stock of CubeSmart on a daily basis. So here we have the stock in a bullish trend. The stock pushes to a new high here on November 17th. There's a subsequent pullback around December 6th and 7th. And it's okay if it's not one single day that you see the pullback in. It can be arranged like this. We see a new high being set in the December 18-19 time frame. This is the head. So you've got the first shoulder, the head at a new high. Another pullback to the neckline. That's what this trend line represents. It's the neckline. A push back up, but you can see it doesn't reach as high as the head. So this is your second shoulder here. And then a subsequent break to the downside. When it breaks this neckline, that's the point where you want to be short the stock. So that's the head and shoulders pattern. Now let's take a look at the cup and handle pattern in the chart of Target. We're looking at this on a daily basis. As you can see, I've drawn the curve. This is the cup. Now the cup pattern doesn't have to adhere strictly to the curve, but as you can see, you've got a shallow pattern. The stock had trended up. It was in a positive bullish trend. It trended up to around $60. You get a pullback. Stock comes back to around $45 at its low. Comes back up to right around $60. And then you have a slight pullback that looks a little bit like a pennant. And this is the handle of your cup. And when the stock price moves above the handle that's sloping down, that's your breakout to the upside, and that's your buy point. As you can see, we had a very nice move up in the stock from that 60 level up to around $72 before we reversed again. So that's the cup and handle pattern. Thank you for watching this video on the cup and handle pattern and the head and shoulders pattern. In our next video, we are going to be talking about single candlestick patterns, and we'll really start to get into candlestick patterns over the next 3 videos. Thanks again, and I'll see you in the next video.